Hello, everyone. Jesse Webb, Traders Pro. Market conditions are getting a little precarious right here at these levels. We have turned to this overall uptrend, but that doesn't mean that we can't reverse and head back down again. We certainly can get these times in strong trends where we get whipsaws in this last entire bull market. Every time we got a downtrend signal, it immediately reversed and headed back up again. That's okay because these are the trends that we're focused on. There's times where we get a reversal, and again, we're not married to that trend. We're just simply following that trend, waiting and watching for it to turn. So at this point, we do have that uptrend, and we do have, that's been a pretty solid basing process, but I've mentioned this before. This is looking very counter trend. Counter trends typically look like this. Trending moves look like this or like this. They move solidly, then counter trends chop around. So that choppiness that's happening right here and running into continual resistance and the inverted yield curve that I talked about yesterday, those are still some things to be aware of in terms of overall risk to this bullish trend right here. Buy-sell ratio also looking bearish right here. Sentiment now selling back through that 50% line. It's at 442. So we've now crossed back down underneath this halfway point. That's another bearish indicator. And then one of the other things to watch that you can use for additional confirmation is if you go to sectors and if you go to these sector ETFs, this is going to show you the breakdown of sectors. There's multiple ways to do that inside the software, but if you look, everything's got a short-term downtrend, and now we're getting really only one sector in the economy, consumer goods, that is bullish, that's in an uptrend. The rest have started to break down. And so, again, that's just additional confirmation that this trend is weakening. One other that we've been talking about here over the last few months is this Dow Jones Industrial right here. And so right now we moved from, we had 17, 18, 19 just last week, back down to 13 in the hold and 11 back into that sell downtrend. So we're just not seeing a strong market here. Even any rallies are starting to be sold, but there's a massive tug of war happening right here. So you can decide whether you want to participate in that or not, or just kind of sit tight, or in some cases just look for what the current stocks that are moving. Obviously, muscle stocks are moving well, and we know that sector, or that healthcare sector, or really anything in that area where medical drugs, pharmaceuticals, biotechs, a lot of things, that's what is working, as well as consumer goods. And we're seeing some other things that are just getting continually beat up here in this last month, or this current month, even year to date. If we look to see what's been working, we have, tech has had a strong rally, but that's also starting to slow. So just be aware of that in this current trend. S&P 500, if we look at the S&P 500 chart, you can see when we have this pattern, I've talked about this often if you've been following these videos, and that is this color. When we have a mess of colors like this is indecision. Okay, we either want to see it solidly bullish or solidly bearish, and those are the markets that we want to participate in. When it starts to look like this, then we need to not enter new trades or lower position sizes on the trade we do, or be very strategic in the individual plays that you're looking to trade. The muscle ETFs is also a good place to look for trend, because the new buys here you're seeing, well, let's look to see what's strong first. So these are ETFs, so you've got this basket of stocks or this group of specific sectors, and a lot of times they're 2x or 3x or inverted 2x or 3x. Whatever is happening in that current trend is going to show up here in this list. So we do see currently you've got this home building supplier triple ETF. This is a bullish trend. That's a bullish pattern right here. Bullish meaning, if you're new to this terminology, we expect it to go higher. This is a bullish trend. This is a bearish trend. Very simple. It's either going up or down. So when we get these long sideways choppy moves, these are the ones that we don't want to participate in. We don't want to trade these. We want to wait for the trend to shift and then continue to move higher and trade when it's green, when it stays green. Once it ticks back into hold, these start to become decision points where we've got to decide, hey, maybe I want to lighten up my position because it could go up or down from that yellow location. So be aware of that. In the muscle stock area, this new the muscle ETF that we were talking about, you've also got ultra silver. So you're seeing where the trends are, and then you can kind of pick and choose how to participate in that trend. So if you're looking at silver, the 2X silver ETF, and it's starting to move up nicely, then you can go in and look for individual silver stocks, maybe go into the index or even go to the sectors, go back to the sector scan, go down here to basic materials, and then you can look for gold or silver mining companies. There's a couple of them in the hold range still, this 9. I can click on that. I can pull in that group, and I can look to see what's the highest ranking stock, GATO, in that silver sector, and let's take a look at that pattern. You can see that it did have an uptrend. It's now in that hold range. Short-term trend has moved up. This is one that then you would just click here, add it to my watch list. Okay, now I've got it set up so I can add it to my watch list. Then I could go into my watch list and I could set an alert on it so that when it moves from hold back to buy, then I'm going to get an email that night and I can jump into the next morning. Okay, so that took me 2 minutes to be able to go through and kind of look to see what an idea might be going from muscle ETFs, the current trend, and then that's the sector, or that's the asset class, or because you can get bonds in here, you can get a lot of different things happening in here, and then you can really narrow down on what is working. That's the whole point of this methodology, is what is working. That's what we want to participate in versus what is not working, meaning moving lower. Anything moving higher is working, at least in a bullish case. If we're long stocks or long, trading call options, or we have a perspective that whatever we're looking to trade is going higher, then that's bullish versus a bearish turn. So let's take a look at some of the muscle stock ETFs, the new ones. We've got BMEA, which has been it's got a nice quiet consolidation here. It's been in a nice uptrend, consolidating. Keep a close eye on this one because it has this potential to move pretty swiftly, and there is risk, though. Obviously, when we're dealing with biotech and we're dealing with any stock, we're dealing with potential for gaps and risks. So keep position sizes small. That's the discussion here of, okay, what should my bias be? Well, we've been talking about this uptrend. We've been talking about the messiness of the momentum, the messiness of the breadth not participating. We talked about so we want to be focusing on what is that current bias that we want to be able to focus on, whether it's that day or this week or a long-term portfolio management, and be able to pinpoint ideas pretty quickly. So let's jump back here to the new buy list. Got a little bit distracted there. BMEA. Let's see. Let's move back here. RAIN, RAIN, symbol there. The 1-year chart on that, a little bit deep of a retracement, nonetheless starting a new uptrend. We know what's working. Medical biotech is what's working right now. Let's go back to that 6-month. Here's a nice pattern. When you see one of these and you get a gap, this is called an engulfing pattern. Engulfing is when this current bar covers up the previous bar entirely from top to bottom. So it gapped lower, and then you had buying the rest of the day. That's a really bullish pattern inside of a bullish buy zone and a potential breakout right there. The caveat to that is market conditions are weak. So it's not an ideal time, really. There's going to be individual stocks, but that's why you want to really pinpoint those individual trades. Right now, that's the list to be focused on. But then you could say, well, my trading plan is saying that I'm not going to be investing in anything if market conditions are bearish, mildly bearish, even in a bull market. But that's got to be because there are different ideas that are always happening and always taking place. You can pinpoint, okay, I'm going to look at, one or two stocks. Maybe I'm going to hold them while they only are in the green level in the leading industry, which we know is that healthcare industry. This is not in that industry. So then I could move on, or I could move back to that list and say what stock is and what stocks are working in the strongest sector. Well, we know that medical stocks are working. This one might be an idea there that's got a new potential uptrend. RELY, we just looked at that one. LNTH, some of these have gapped a little bit hard. You know that when I'm talking about the gaps and it bumps up into this range, we can get some continuation because there is some strong, and you get a move like this and it starts popping up on everybody's radars and they start focusing on some of these stocks that are moving. You can get some continuation on that, especially if the market starts to hold right here at these levels and we do see some buying the dip mentality. That certainly can happen with the trend that we're in right now, and we may be able to see some of those things taking place. Let's move to the next stock, UGP. This is a oil and energy play. It looks like up to the extreme already. Again, we don't love these. These are not an ideal bullish pattern. Ideally, it's a little bit tighter to the original pattern. But a breakout, it's a breakout trade, $3 stock. Oil could be basing and potentially finding a low. Remember that we can go here. I can go over here back to market trend and sentiment, and I can take a look at crude oil and say, where are we at? Is oil getting near a potential bottom? The sentiment tab is going to quickly help you see, okay, I've got oil as a sector is trending lower, but it may be approaching a low point. So, and at these extremes, at these edges, or what I call these, when you're dealing with the edges, that's where you're dealing with some potential higher probability reversal areas. It's higher risk, but there's potential higher reward. What we want to focus on most of the time is momentum and that trend. But this can also help us realize when those trends are ending or when a new trend is beginning. So keep a close eye on oil right here, because it's had a pretty nasty sell-off. It may be finding some support here, and then go in and look for some strong stocks, some individual stock names inside that oil sector. I would go to sectors, I would go to my sector scan, and then I would go into oil and energy. You can see oil and energy right now is just bottom of the barrel right here. It's been beaten up. 242 stocks in that sell, only 25, you got a buy-sell ratio of 0.10. So heavily weighted towards bearish trend right now in oil. But that could be coming to an end, okay? Remember that extremes, at some point, it's going to become oversold, and we're going to get a bounce looking at the sentiment area on the oil, and then looking at, is that a reversal trade, a reversal play where I'm looking for a bounce off of a deeply oversold area. There was another stock I was going to show you. It was USO, which was the ETF for oil itself. This is an example of using the extreme when you have everything that's red. In this case, well, why is this green right here? It's because this is so oversold. This has gone down so far, so fast, that the probabilities of it continuing to go this direction, at some point, this is going to hit this edge and it's not going to go any further. Okay, that's not sustainable. So you get this is reversal risk, but it's bullish reversal risk. It's the green. So there's a chance that it could reverse back this direction. Maybe not potentially a whole new brand new trend, but at least bounce back up from off of these levels. So when you see this pattern here and you like to trade that way, you like to look for the things that are deeply oversold, then look for those extremes and say, yeah, there's a real high probability chance from this zone that we're going to get a bounce, and it's going to be a tradable bounce. It may not be a continued new upturn or a continued new trend, but it certainly could be an opportunity for a bullish trade of some type. Okay, so when you're looking, it doesn't always have to be the leading. If you're looking for what is really lagging, and you're wanting to say, I think oil may be done right here. I think it may be ready to bounce. The rank has gotten crushed. Everything. The 2-year chart on this, retracing back inside this buy zone as well. So the recent trend as it's moving higher, the buy zone of that 50% 618 retracement area is is pretty significant. That's a pretty significant retracement reversal zone. This has had a ton of whipsaw, a ton of false signals along the way, and that happens in a downtrend. So those are some things also to be paying attention to. If that long-term trend is down, there's a higher chance of a bullish bar being a whipsaw bar, being a fake out bar. Okay, so oil has been doing that, and really the market as a whole has kind of been doing that to us this last year and been a little bit tougher to deal with. But there's some ideas for you today. If you don't have full access to the software, you can sign up with the link below, and we look forward to having you. Have a great day today.